Hello, Accounting 203 students. This is Professor Hassey speaking live and in color from Accounting Central in Claremont, California. And it's Wednesday afternoon, June 17th, and this is our Week 2 introduction video for Accounting 203. And I hope you all are doing well and getting ready for our class tomorrow evening at 6 o'clock. A couple of things to note for tomorrow's class. Here's our agenda as I showed you earlier. Our class is going to center around 4 problems from the textbook. In Chapter 1, page 34, problem 1-7a. In Chapter 2, on page 74, problem 2-1a. In Chapter 3, on pages 115 to 118, problems 3-1a and 3-5a. And in Chapter 4, problem on page 154, problems 4-1a. Those are going to be our 4 problems we're going to discuss to learn about the accounting cycle. Journal entries, transactions, general ledger, adjusting entries, trial balances, adjusted trial balances, financial statements, and closing the books. We probably won't get to Chapter 4 tomorrow evening, but those 5 problems are the key problems to prepare. You will be having an assignment or a quiz this coming week posted tomorrow, which will be on Chapters 1 and 2. So a lot going on. Get prepared for tomorrow night and we'll tackle it. Here are a couple of videos to get you prepared and to refresh your memory about our first week study from our class. Here's a couple videos.
Accounting is an information and measurement system that identifies, records, and communicates information about an organization's business activities. Identifying business activities requires selecting transactions and events relevant to an organization. Recording business activities requires keeping a chronological log of transactions and events measured in dollars and classified and summarized in a useful format. Communicating business activities requires preparing accounting reports such as financial statements. It also requires analyzing and interpreting such reports.
The first 2 steps in the accounting process include identifying transactions and source documents, and analyzing transactions using the accounting equation. Let us now focus on the next 2 steps. Step 3 is to record each transaction chronologically in a journal, and Step 4 is to post the entries into the ledger. In a T account, the difference between the left and right sides, including any beginning balance, represents the account balance. If the sum of the amounts in the debit column exceeds the sum of the amounts in the credit column, the account will have a debit balance. On the other hand, if the sum of the amounts in the credit column exceeds the sum of the amounts in the debit column, the account will have a credit balance. Double entry accounting requires that for each transaction, at least 2 accounts are involved, with at least 1 debit and 1 credit. The total amount debited must equal the total amount credited. The accounting equation must be kept in balance. This means that the sum of the debits for all entries must equal the sum of the credits for all entries, and the sum of debit account balances in the ledger must equal the sum of credit account balances.
So there's a few videos to kind of like highlight the couple of key points from our first 2 chapters and get us prepared to do our 5 problems in class tomorrow per the agenda. So if you can have a chance to look at some of those problems, please do so. They'll give us a good idea of the first 4 chapters. Again, you'll have a quiz tomorrow due next week on chapters 1 and 2. And then there'll be another quiz the next week on chapters 3 and 4. So that's where we stand right now. Look forward to seeing you all tomorrow night. Any last minute questions, let me know. Have a good evening, and we'll see you tomorrow night at 6 o'clock. Adios.